Mark here at PPT Trading Systems. Today is Tuesday, March 28th. So gang, I apologize because I have not been doing a great job keeping up with my videos. And let me tell you why. So, I have been in what I call the laboratory, where that's what I call it when I'm cooking up my trades. As you all know, I've had primarily been focusing on oil, and oil has been going sideways. So I've had to add some markets, and in doing so, I started noticing some behaviors. And so what I decided to do, guys, is I decided to diversify not just among markets, but also among strategies. So let me show you a trade that we called in the room today. We have working right now. So this is called the ES Pivot Trader. Now I haven't tested it on any other market other than the ES, but we just took it live this week. Yesterday had one trade. It was a loser for about 215 bucks. Just one trade. This trade here is long from 43.75. Looking for almost a 10-point target, guys. That's $500 per contract. Now, it hasn't hit target yet, but it's right now currently 4 ticks away. So that's diversifying between strategies. Now, let me also show you something that I did with the Russell. So with the Russell, I started trading it back in February, end of February, beginning of March. And what I noticed was if I was risking 15 to make 15, which is what I do in oil, it really looked like I was leaving a lot of money on the table. So I went to the drawing board and I logged over 180 trades in 2 days. I was testing something, testing a theory. And I want to share the results with you guys. Here they are. So this is every single PPT trade from January 1st to current time. Now what I'm doing is I got rid of the 15 by 15. And I moved to an ATR stop and an ATR target. So I'm risking a 3 ATR to make a 7. That's how the numbers kind of shook out. Here's what the equity curve looks like. Now this is taking every single trade. January started off at just a blazing start, right? This is per contract. And then February hit and you just had a nice little drawdown. Almost gave back the entire January gain. And then look what happened. March. And I got lucky enough that this is when I started trading the Russell. Now that rarely happens, but it did happen. I guess the trading people felt bad for me because of crude oil. So now let me show you what it looks like if I combine oil and Russell. So these are all trades that all PPT signals for Russell and oil for 2017. Includes aggressive and conservative. Notice how the February drawdown is gone because oil had a decent February. But also notice how the big shot to the moon is also gone because oil's had a bad March. But Russell has kept it up. So this is starting with a $5,000 account. It's at the end of the first quarter basically now. Your $5,000 would have grown to almost $9,000. Guys, that's almost an 80% gain in a quarter. And this is also after fees. So now, guys, I took it a step further. I've been really, really busy. I took it a step further. And I made an assumption. Here's what I had to figure out. How in the hell do I filter out trades when the market is chopping? Because let's be honest, you don't know that you're in chop until you're in chop. So I had an epiphany. Here's what I did. Now, this is just something that I tested. I added two things. Three things, really. I added the day session open. And I added the 24-hour open. Because here's what's been happening to oil a lot. It just trades between the day session open and the 24-hour open. So wouldn't it make sense that if I'm trading into either one of these levels that I'm just trading chop? So what I did is I went through all of my trades and I removed the trades that were trading into one of these levels. The difference was staggering. Here's the other thing I did. I added a 200 period moving average. And I had an indicator built down here that shows the slope. If it's white, that means it's neutral. Another filter to not trade. So I added three things, gang. Three. Very simple, very objective, and I want to show you the difference. So I already showed you the equity curve. If I take, well, where am I at here? Oh, here we go. I showed you the equity curve. If I took every trade, 5,000 to 8,700, almost an 80% gain. Now let me show you the equity curve. If I remove the trades that are trading into the open, either one of the open prints, or with the 5 period being flat, just remove those. 5,000 to over 11. Guys, that's over 100% gain. And here's the other thing. I take less trades. I implemented the filters in our trading room last week. And I had 3 trades immediately. I added them on Thursday last week. Between Thursday and Friday, I had 3 trades that were filtered out that were all losers. It makes sense, guys. So I'm going to get back to posting some videos. Let me show you the day today. I had no oil trades today. I don't believe, unless one set up after my room. On the Russell, boy, the Russell was a shame today. Let me show you why. So I took this trade. I had a 18 tick stop and a 42 tick target. Very nice, right? So this is a trade we called in the room. That was a signal that we called in the room today for $420. This trade came down and just whipped me out just barely before it would have gone up and actually hit target. But then there was another trade that set up, and this one had to end up with a 15 tick stop and a 35 tick target, and that one hit target. So 2 trades on Russell, over $500 per contract. That's actually with 2 contracts. I'm sorry. So these numbers are with 2 contracts. Russell's $5 a point. So in order to make it balanced with what I was trading in oil, I always show it as 2. And then there were no crude oil trades that I'm aware of. I'd have to go back and look. I did training today, so I don't know what the charts look like actually since training. And then guys, if the ES hits today, again, it's 4 ticks away, but that's going to add just over 900, up 3 ticks away now. It's going to add over $900 a contract to the totals. So gang, things are rocking and rolling. And I'm in the middle of testing a strategy that, let me show it to you. I'll show you the numbers. I walked through this in the room today. Let me find it. Where is it? Okay, gang, here it is. So what I'm testing is using the PPT system and going for much more aggressive entries, using a tight stop and a large target, forcing a 3-to-1 risk reward using the ATR. So this testing is probably going to take me about 2 months to complete. I'll have about 1,000 trades tested, and I'll know exactly what I want to do. I'm also testing 3 different exit points. I'm testing one exit point, which is this one right here. This is no trade management. I either hit my stop or I hit my target. There's no trade management. Here's what's interesting though, gang. Look, it's only trading at 29% accuracy, so I'm going to lose 7 out of 10 trades. But look at my average win, 257. My average loss, 83. My expectancy is 16. My risk reward is over 3-to-1. Now, the profit, just about $1,000. This is over 7 trading days. And this would be per contract, right? Okay, so now let's look at another style where I manage very aggressively. This is not all in, all out. This is very, very aggressive. My risk reward goes down slightly. My expectancy goes up by $10 a trade. That's really big. Now let's look at a third one. Now this one is also very aggressive on the management, but I manage by what I call microstructure. My risk reward ticks up, and look at my expectancy, 38. Win percentage goes up a little bit. This is huge, gang. Huge. If I can hit these kind of numbers, and I can do this over 1,000 trades, you're talking about a system that can literally almost print money. Stay tuned, guys. It's going to take me 2 months. All right. I hope everyone's doing great out there. Sorry for the lack of videos. I'm going to start hammering more of them out for you guys. I hope y'all enjoyed the couple trainings that I put on the website or on YouTube. All right. Take care, gang.